numbers. What do you take?
I sense that. I think what we're seeing here in particular is the fact that if the companies can't predict their business, how can you expect the analysts to do so as well? We haven't necessarily been able to model a 1 in 100 year pandemic and then the recovery from that pandemic.
What are they paying for, honestly?
It's tough.
Yeah. The margins are real, right, guys? I mean, the wages are going up at so many different businesses. I know I cover Wall Street. The margins are certainly going up, going down as you see costs go up there. Real estate costs.
Because they're paying the bankers a little bit more.
People want more pay, but
well,
that wage
inflation
so hard. You see across industries in the numbers.
Yeah, I mean, look at the deal numbers that we're already seeing. A record summer, and already anticipating with the afterpay news that we got just in the last 48 hours that it's going to be another blockbuster month for deals. So perhaps no slowdown in August.
I'm curious about this. Tim, you're young. So, I mean, you understand how all this works.
I speak for the youngs.
So you go, you buy something, and what do? You just pay like $10 a month?
You know, I haven't used any of these services, but I think that what it shows is that the banks haven't been offering something that there is a need for, and you have companies like Afterpay, you have companies like Affirm that do offer that. So you have to, if you're a bank right now, you're thinking, okay, how can I offer this service so I do continue to be able to compete with the other services that are out there. That is going to do it, though, for our cross-platform coverage on this Monday afternoon. Join us tomorrow, same time, same place on YouTube, on Bloomberg Radio, and on Bloomberg TV.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, well, there it is, the first trading day of the month of August. The Dow finishing the day down just about close to 0.3%. The S&P 500 close to 0.2% as things get settled there. And the NASDAQ finishing, though, in the green, higher by 8 points, Paul.
Yeah, a little bit kind of selling off there on the day. And again, I think some concerns here, some viable concerns about global growth, maybe just a little bit of a reevaluation. Again, this Delta variant is something that people are trying to get their hands around. Yeah,
we'll continue our coverage in just a few minutes. In the meantime, let's get the latest on world and national news with Karen Chase.
And as the Delta variant surges, more political leaders are issuing mandates. Denver Mayor Michael Hancock is mandating that all city employees and private sector workers in high-risk settings be vaccinated by September 30th. Health officials in San Francisco are reinstating a mask mandate for all indoor settings. That goes for vaccinated people, too. Given the situation, Dr. Richard Besser, a pediatrician and president of the Robert Wood Johnson Foundation, says getting kids vaccinated as soon as possible is vital.
It's really important for children 12 and older to get vaccinated. The more kids who get vaccinated in that age group, the more we can see middle schools and high schools having a more normal experience for their kids. It's not going to be normal this fall, but the more kids who are vaccinated, the less disease transmission there'll be, the less times that school's going to have to close down.
Apple has banned a controversial dating app from its app store. It's called Unjected, and it helps people search for other unvaccinated suitors. The White House said the CDC was unable to find legal authority for a new targeted eviction moratorium and asked instead that states and local governments enact policies to keep renters in their homes. Mass evictions could potentially exacerbate the recent spread of the Delta variant, as roughly 1.5 million households could face likely evictions. Former President Donald Trump used nearly $700,000 in campaign funds to pay the lawyers who defended him at his second impeachment trial, according to the Federal Election Commission. The legal team's plodding performance received largely negative reviews from many corners, including legal commentators. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Karen Chase.
Thank you so much for that update, Karen. Tim Stenovic and Paul Sweeney in the Bloomberg Interactive Brokers Studio in New York. Paul, you said it earlier today, a merger Monday in August.
Yes, and one of the deals includes Reese Witherspoon. She's selling her company. It's a content company, production company, selling it to a group of executives, former executives of Walt Disney Company, who I know quite well, Kevin Mayer and Tom Staggs, plus Blackstone Group.
Kevin Mayer has had several jobs over the last year.
Yes.
TikTok before this.
Right.
Maybe I skipped one actually between TikTok and this one.
Yeah.
And before that at Disney.
Right, exactly right.
Yeah.
And Tom Staggs was the former COO, former CFO, the heir apparent to Bob Iger until he wasn't, but very, very highly regarded in Hollywood. He and Kevin getting backing from Blackstone and buying Reese Witherspoon's production company, putting a valuation on this company of $900 million.
Okay, so that is what I wanted to talk to you about, because you have been an analyst covering the media space for years. What do you see when you see a $900 million figure for a company like Hello Sunshine?
I think of the phrase that I always attribute to Sumner Redstone of Viacom, and that is content is king.
Yeah.
And this is a new company, a relatively new company, a relatively limited catalog, but certainly some great producers, some great writers, and all that kind of stuff. But $900 million is just an extraordinary valuation. And what it shows is content is king increasingly in a world of streaming, because it's not just the big broadcast and cable networks that are looking for content, it's all the streaming companies as well. And they're spending billions. Netflix, Disney, each spending $20 billion on programming. The broadcast networks historically would spend $3 billion, $4 billion. And so think about the money.
So the idea with this is they create that content and then they sell it to Apple, like The Morning Show, for example.
Exactly.
Or they sell it to Comcast, perhaps, or Peacock. Name the service, right?
Exactly.
Put a plus on the end of it.
Exactly right, and it's all about scale, so it's very interesting to see.
This is Bloomberg Radio, and this is Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. U.S. stocks paired their earlier session gains. The S&P 500, the Dow, they slid into the red. Now, earlier today, you had the July manufacturing growth coming in a little softer than expected. Flattened the yield curve, and weaker growth in the U.S. manufacturing kind of added up to fears about the steady recovery. You also had the key factory reading from China. That also slipped. S&P 500 ended the session 8 points lower, down about 0.2% at 43.87. The Dow was down 97 points, down 0.3% to end the session at 34,838. The NASDAQ 100 ended the session up about 4 points at 14,963. Amazon trying out a fee for customers who've grown accustomed to getting free delivery from Whole Foods. At the end of this month, Whole Foods will start charging $10 for delivery from stores in Boston, other parts of New England, as well as Chicago. Square into the session up about 10%. Their $29 billion deal for Afterpay has put global deal makers on course for the busiest ever summer. And investors focused on yields. The 10-year, the benchmark, at 1.17%. Down about 5 basis points. And we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Tim and Paul.
Thank you so much, John Tucker. So a new push by Congress could require crypto brokers to report transactions to the IRS. It could create some unwelcome tax bills, but could also clarify rules for traders and users of Bitcoin and other digital tokens, potentially strengthening the system in the long run. That's according to people in the industry. The idea is in a last-minute addition to the $550 billion bipartisan infrastructure package that is now being considered by the U.S. Senate. And the hope is that it's going to raise some $28 billion to help pay for the bill. Joining us now is Michael McGuire, founder and CEO of SimBridge. It's the first U.S.-based regulated digital asset exchange designed specifically with an institutional focus using blockchain-native technology. It is certainly a mouthful. Michael, thanks so much for joining us. It's good to have you on the show.
Yeah, thanks for having me. And yeah, that was definitely a mouthful.
So this is an industry that I think is still so unfamiliar to so many people. So in layperson's terms, explain what SimBridge does.
Sure. SimBridge is a digital exchange that uses blockchain to create transparency for transactions on the exchange. And what that does is it makes it easier for regulators to understand if there's been market manipulation going on. And as you know, in the securities industry, there's a lot of rules about market manipulation. And in the crypto world, those rules haven't really matured yet. So some of your better exchanges adopt, sort of a self-policing approach, and other exchanges don't.
Yeah, Michael, I think it's a great topic here because I think a lot of investors view crypto trading, just broadly defined, as kind of the Wild West, if you will, very early days. And how do you think this is going to evolve? Is this something that the Securities and Exchange Commission, for example, might take a look at? How do you think this might evolve?
Sure. There is a lot of volatility in the marketplace. You just see, it's off 6.5% today. That's a huge number. The SEC and CFTC had come out and said Bitcoin's a commodity, right? So It should be regulated a commodity. SEC founded in 1929 to regulate securities. I don't think that's their jurisdiction. And unless you're trading on margin or trading a future or an option, the CFTC doesn't regulate spot transactions, which many of the exchange transactions are. So, I would put out there that maybe there's a need for an agency that's going to focus solely on crypto.
I'm wondering about the infrastructure bill that I alluded to in my introduction to you. We had Christian Smith, the executive director of the Blockchain Association, on Quick Take earlier today. And she and her organization are obviously not happy with the infrastructure bill and the way that crypto is going to help raise about $28 billion. She essentially is saying that she's urging senators to clarify that the language doesn't capture non-custodial entities in the digital asset ecosystem. What do you make of the way that crypto is treated? And look, mind you, this is a bill that's 2,700 pages, and crypto regulation is included in part of it.
Sure, a couple thoughts on that. I think what they're proposing is really nothing new, right? They want to understand what transactions occur, what capital gains exist for people who are trading on exchanges, and making sure those are reported to the IRS for tax compliance. Several exchanges and Simbridge will issue 1099-Ks, right? So you're able to report your transactions. But I think the way that it was done in the infrastructure bill created a lot of confusion, and I think that contributes a little bit to the sell-off we're seeing today. And it really needs its own thought, its own, bipartisan agreement, and a really hard look at this, because this industry is here to stay. This asset class is here to stay. And if you're regulatory heavy, you're going to stifle innovation and potentially push this whole market offshore.
The other side of that coin would be you need some regulatory structure here to attract capital, make this, quote unquote, a real asset class. How do you think about that?
Yeah, I mean, we're all for regulation and transparency. We want to improve on the way things are done. So I think that's, that is needed. And that's why we've decided, we decided to set up in the U.S. in one of the strictest regulatory environments in the world and focus on accredited investors and institutional investors that demand that transparency and want regulation to support the markets. Now, I wouldn't want to see all the volatility to go out of the market, right? Because that's what people want to trade.
So, Michael, and we're going to talk about this more in just a few minutes after the break, but give us an idea for the way that demand has shifted or demand has changed for Simbridge in recent months. If we think back to where Bitcoin was trading, in March of 2020, right? Just a few $1,000s for a Bitcoin. As the price has gone up, talk to me about the way that demand for services like yours has shifted.
Sure. I think, if you think about 1 year ago, you wouldn't see Bitcoin price on CNBC on the ticker. We wouldn't be having this call, right? We're having this call because large players in the industry, Fidelity, Goldman, JP Morgan, are offering, crypto assets to their high net worth clients. And so, that's why it's popular, and that's why we're having this conversation, I think. So
how much demand are you seeing right now, just in 20 seconds?
I mean, it just
quantify
doesn't
it for
stop.
us.
I mean, I think the demand is there day after day, whether it's a buy or a sell.
Regardless of whether or not we see a big shift in the price down of Bitcoin?
Yeah.
Okay. All right, well, sit tight because we're going to have much more with Michael McGuire in just a few minutes. He's founder and Chief Executive Officer at Simbridge. Joins us on the phone from Greenwich, Connecticut. Bitcoin right now trading at just about $39,000, down just about $2,100.
Yeah, off about 5%, but it's volatile, that is for sure. Right now, let's get it.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenbeck and Paul Sweeney in the Bloomberg Interactive Brokers Studio in New York. Paul, Bitcoin moving. You know, the beautiful thing about Bitcoin is it trades all the time.
It trades all. You know, that's one of the first things you have to get used to. You come in Monday and you say, wait. That's not where it closed Friday. Then you're like, oh yes, it trades over the weekend. You know, it's really interesting to see. It hit that 30,000 support level a few times and kind of bounced. So
perhaps it creates a headache for CFOs who have on their balance sheet that it's always
exactly.
trading, right? Well, in just a few minutes, we're going to get back to talk Bitcoin and all things crypto with Michael McGuire, founder and chief executive officer at Simbridge. In the meantime, let's get a check on the latest in business news with John Tucker.
All right, gentlemen, after U.S. manufacturing growth slowed down in June, stocks lost nearly all their early gains. The Dow ending 97 points lower. The NASDAQ holding on to an 8-point gain. The S&P 500 was down 8 points. Big gainer shares of the payment provider Square nearly 10% higher after agreeing to pay $29 billion for the Australian buy now, pay later financing firm Afterpay. Friday, we're going to get the July jobs report from the Labor Department. Stephen Stanley is the chief economist at Amherst Pierpont Securities.
People are not flocking back into the labor force in the numbers that we had hoped, for the reasons that everyone suggested: health concerns, child care issues, and the supplemental unemployment benefits. And the latter two of those should be starting to ease now.
McDonald's will now require employees and customers to again wear masks in restaurants where they have high rates of COVID-19 infections, regardless of vaccination status. And a big blow for chipmaker Qualcomm. Google's upcoming Pixel 6 smartphones will replace Qualcomm's critical chip with its own in-house processor. Dow Jones Industrial Average ending the session 97 points lower, again down 0.3%. To end the session at 34,838. The NASDAQ 100 3 points higher. The NASDAQ Composite Index was up 8. And the S&P 500 ended the session down 8 points. That's down about 0.2% at 43.87. The 10-year yield was down 4 basis points. The yield at 1.17%. And we check the markets for you every 15 minutes during the trading day, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Tim and Paul.
All right, John, thank you so much. We appreciate it. Let's get back to our discussion of all things crypto. We do that today with Michael McGuire, founder and chief executive officer of Simbridge. He joins us on the phone from Greenwich, Connecticut. Michael, one of the things as we talk to investors, I think they're looking for a more validation of the crypto space. And, yes, Elon Musk and putting crypto on the balance sheet of Tesla was a validating event, arguably, accepting Bitcoin as payment for a Tesla. What do you think, or do you think there need to be more validation events to really make this a widespread, widely held asset class? If so, what do you think needs to happen?
Yeah, that's a very good question. Thanks. So if you look at the recent Fidelity report that came out of a survey of a bunch of institutional investors, 7 out of 10 of them are looking to add crypto to their portfolio. So when you see like a constant drumbeat of big institutions coming out with information like that, or JPM offering crypto assets or Bitcoin type of investments to their high net worth individuals, I think that in itself is validating, right? These are incumbent players on Wall Street, the sort of name brands of the industry that are saying, you should really be looking at having some type of allocation to this type of asset, but in a measurable way, right?
What does that allocation do, though? Is it indeed a replacement for gold, as some bulls have said? Is it something that it doesn't seem like it diversifies in a way that, as we saw in the sell-off last year? I mean, you weren't safe anywhere. Bitcoin tumbled there in March of 2020. But what is the purpose that it gives investors in a portfolio?
Yeah, I think it is diversification, and it is, some people argue that it's, non-inflationary, and people are worried about inflation or investing in Bitcoin or gold, Simbridge is going to be launching tokens that are backed by different physical commodities, specifically metals. So you'll be able to take a directional view on, for instance, ESG or electric batteries, right? You could buy tokens that are backed by the individual metal components like cobalt, nickel, in the EV space, or palladium and platinum in the combustion engine catalytic converter space. So it gives you a way to express a view that doesn't already exist for a lot of investors, right? Your hedge funds can already do that, but for an accredited investor, it's a little more difficult.
Michael, do you have a sense, or I'm sure you do, kind of where institutional investors, professional investors, mutual funds, hedge funds, how are they trading in the crypto space, or what are they trading? Is it just Ethereum? Is it just Bitcoin? How are they trading? What are they trading?
Yeah, I think 70% Bitcoin, 30% Ether. There's not a whole lot more dive down into the cap list of crypto, and they're not trading so much. I mean, most of them are buy holds.
Okay.
People are putting stuff on their balance sheet. They're holding it, but you do have some prop desks who are trading it.
Is it the type of thing that it belongs in a 401k? There are services.
Question.
There are small providers now of 401ks that are offering this.
Yeah, good question. I would say, if you're an accredited investor or above, you probably should have some of this in your 401k.
Meaning you have a liquid net worth of $1 million.
Liquid net worth, or make over $200,000 a year in salary, or $300 combined, or $1 million net worth without your house. Then yeah, you definitely should have some of this in 401k. But you need to understand that it is volatile. But it would be a good exposure, in my opinion.
So what's the next milepost for this industry, Michael?
Well, I think getting regulation that works for everyone in the space, right? And I understand regulators like to regulate things, and the IRS likes to collect taxes, and we're all in favor of that, and we want to help them. But we need to see a coming together of all the constituents in order to iron out something that's going to work for the industry and not favor some of the larger incumbents over the smaller, more innovative companies.
What scares you from a regulatory perspective in 30 seconds?
Just not knowing what's going to be going on when I wake up in the morning.
The uncertainty of it?
Uncertainty, absolutely. That keeps me up at night.
So what do you want to see from regulators?
A better communication and dialogue, and not, just throwing something in the infrastructure bill that's going to raise, $28 billion in taxes. I would have rather have them said, listen, we need to pay for this bill, and we're going to do it through tax compliance for crypto trading, full stop. Okay, great. Collect more taxes on crypto trading. I love it, because that means there's more trading that's going to happen and more compliance. That makes sense.
Michael McGuire, founder and chief executive officer at Simbridge. Michael, thanks so much for taking the time and for joining us talking all things crypto right here on Bloomberg Business Week. Well, we got much more Bloomberg Business Week coming up in just a few minutes. We're going to be joined by Joe Matthew and talk all things infrastructure. In the meantime, let's get a check on the latest world and national news with Karen Chase in New York. Hey, Karen.
Good afternoon. The Biden administration is calling on states and cities to do more to help renters and homeowners behind on their payments stay in their homes. The White House had urged the CDC to issue a new eviction moratorium, but the agency was unable to find legal authority for it. The COVID surge continues, prompting more authorities to set new restrictions. Some are mandating masks for everyone in indoor settings. Others are requiring vaccinations for access to offices. McDonald's and Target stores are again imposing mask mandates for workers and guests. South Carolina Republican Senator Lindsey Graham is among those who've come down with breakthrough infections. He tweeted his symptoms are mild and he feels like he has a sinus infection, but he's glad he got vaccinated, knowing it could have been much worse. Senate Majority Leader Chuck Schumer hailed the arrival of the huge infrastructure bill on the Senate floor today and expressed hope it could be passed quickly.
Given how bipartisan the bill is and how much work has already been put in to get the details right, I believe the Senate can quickly process relevant amendments and pass this bill in a matter of days.
The measure would inject $550 billion into roads, rails, bridges, and broadband. A shot across the bow of misinformation mongers. Twitter has signed a deal with the Associated Press and Reuters to help elevate accurate information on its platform. Twitter said the program will expand its existing work to help explain why certain subjects are trending, to show information and news from trusted resources. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karen Chase, and this is Bloomberg.
Thank you so much for that update, Karen. Paul, back in 2015, I was covering media at a different publication, and I wrote a lot about AT&T buying the satellite TV operator DirecTV for nearly, well, for tens of billions of dollars, right? This was $48.5 billion. And I was thinking to myself, what are they thinking doing this? Buying, this is, mind you, this was when Netflix was on the rise. This is when everybody was cutting the cord. And it turns out, hey, they weren't actually necessarily making the right move.
No, they weren't. And I was a research analyst at the time covering DirecTV. We're like, wow, somebody took me out of my misery here of covering this stock because, you know, it was simply a story of, at that time, cord cutting was impacting the satellite industry even more so than the cable business, because with the cable business you can still bundle your cable video business with your broadband, and that's a pretty attractive offering. Satellite TV, that's it. It's video, and people were just cutting the cord and going to streaming, and so it was a dying business. We knew it at the time. We were shocked that AT&T would initiate its foray into media by buying that asset, and then it got worse from there, and so now they're selling it to TPG, which I actually think is a good deal for TPG because it's still, DirecTV is a cash flowing company, good cash flow margin. It's just not growing. It's actually shrinking, but there's cash flow. You put a good capital structure on there, and you can generate some equity returns.
So what do they do with it?
I think they're just going to run it for the cash, and just maximize the cash. Again, put a reasonable capital structure on there, and we'll see. It's just something that'll generate returns. They'll take a lot of dividends out, but AT&T had to get out of that business because it's not a growth business, and as a public entity, you have to have a good top line story.
What was the hope for it when they bought it back in 2015?
I really don't know, other than they were going to bundle it with all the other AT&T TV, wireless, and things like that, and that's fine. But the cable industry was doing that, and it wasn't working. They were still losing video customers, and so you just didn't see it at all.
More on that in a few minutes. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. On Wall Street, supply hurdles facing manufacturing businesses, as tracked by the Institute for Supply Management, dented the stock averages today. We have the S&P 500 closing lower by 8 points, ending the session at 4387. The Dow Jones Industrial Average was 97 points lower, down 0.3% at 34,838. Now, the NASDAQ 100, it did end higher, up only about 4 points at 14,963. Tensions with Iran over a deadly attack on a tanker could also weigh on markets. Crude oil was lower after the U.S., Israel, and U.K. vowed to respond to that attack. Brent crude was down 2% at 73.13. Reese Witherspoon's media business positioning itself for a streaming era. Hello Sunshine selling itself to a firm backed by a private equity firm and run by 2 former Disney execs. Witherspoon will join the board of the company and will continue to operate it. And the 10-year yield right now, 117, was down 4 basis points. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Tim and Paul.
All right, John Tucker, thank you so much. We appreciate it. Well, those of you that listen to Bloomberg Markets in the morning, you know I am a big fan of all things in terms of rebuilding this country, in terms of the infrastructure plan. And I think about the Gateway project, which is the train tunnels underneath the Hudson River that gets folks to and from New Jersey, as well as the Amtrak lines for the eastern part of the United States. They're more than 100 years old, and I'm just waiting for them to tumble in on me one day on my New Jersey Transit commute. So hopefully we can get something done there. So we're talking about infrastructure. When we talk Washington, D.C., we need to talk to Joe Matthew, host of Bloomberg Sound On. Am I ever going to get my Gateway project?
Sure want to say yes to that. Then, of course, once we get the money together here, the question will be, are there any workers available
good point,
to do that project? But, yeah, we've got some progress here. We have an actual document. How about that? I feel like I should ring a bell or something.
You read the whole
because
thing already, right?
Absolutely. 2,702 pages. Try printing that and then get back to me. By the way, it stands about 2 feet tall based on the once the final product is in front of you here. So we have very similar dollar signs than we did before the weekend. $550 billion to the question, or I guess the setup you were just talking about with roads, tunnels, and so forth. $110 billion new spending, roads and bridges. There's also billions more for rail and Amtrak that will take that tunnel, of course, in fact, more than we've seen since they created the whole agency. Then you've got money for clean drinking water and money for transit. Those last two were debated heavily in the final throes of our negotiations last week. Thing is, guys, we'll get a vote at some point here. Republicans are asking for open amendments on this, an open amendment process. That would mean, C-SPAN heaven. You'd be counting votes all day, every day, and it would likely make it difficult for Chuck Schumer to schedule the final one on Thursday. That could push things into the weekend.
Joe, this is a far cry from what Democrats wanted. $2.6 trillion, the one that Biden proposed back in March.
Well, and that's why we talk every time about reconciliation, because there are going to be 2 bills here. The other one would start immediately after this, the reconciliation bill, right? $3.5 trillion. And there are questions about whether that remaining as large as it appears right now, because some of the moderate Democrats, and you always hear Joe Manchin's name come up. The other one is Kyrsten Sinema. These are the 2 moderate Dems who helped to negotiate the bipartisan bill. They have to go home in August and hold town hall meetings and bump into people at the coffee shop. They don't think they can sell that number. So it's likely that could be changed as well. Now, I know where we're all going next year. That's Nancy Pelosi. She says she will not vote on one without the other. And that's what gets Republicans upset, because they're kind of married, at least in terms of the semantics that the Democratic leaders are using. So she won't move on this bipartisan bill until the reconciliation bill comes together in the Senate.
And that certainly, I would guess, gives her some leverage here. That kind of brings me to where I wanted to go, Joe. I guess when this administration came in, I'm just wondering now, as I look back, was I a little naive thinking that, gee, I have a president who spent 40 years in the Senate. I've got a vice president who just came from the Senate, presumably Some bipartisanship, I thought, might be possible, and this was a pretty big test. How do you think the bipartisanship, is there any left in Washington, D.C.?
Well, that's a big question. We could do a whole show on that. I would say that there are Republicans in this deal. You know, ask Senator Portman how he feels about bipartisanship. There are actually Republicans who had a real impact on this, a real influence on it, and Mitch McConnell voted to proceed. So it depends on which side you're talking about. This bipartisan package does seem to have something for everybody. Everyone can take a little credit for it. We fixed your bridge, we fixed your road. That $3.5 trillion deal, though, is going to be a very different matter. Mitt Romney, by the way, known as being a moderate, Donald Trump calls him a rhino. He says he hates that other bill. He wants to see this one get passed and won't go near the reconciliation.
What about that so-called soft infrastructure?
Yeah.
In-home care, child care, stuff that Republicans really pushed back on when Democrats proposed it, and they said, hey, this is not what we consider infrastructure. Even broadband, for example.
That's true. And broadband ended up in this bipartisan deal. Questions there as well is, do we have the high-tech workers to install all of that that wiring and all of the routers and so forth? But with regard to childcare, soft infrastructure, that's reconciliation. That's what's going to go in this other bill. And Democrats will tell you that this stuff is infrastructure. It's been badly needed, and presidents for generations have been unable to bring this home. So you're going to see a much more wild debate, I suspect, over the reconciliation bill, and a lot of it, most of it, will be among Democrats because progressives and moderates do not see eye to eye on it.
So, Joe, I want to go back to that Nancy Pelosi issue. I mean, tying these two bills together, what's the drop-dead date on trying to either enforce that or drop that issue?
Well, there technically isn't one. You know, they can spend this money really any time they want, but they don't want to slow this bipartisan plan too much. It looks like this will all likely come together in September. Because the House is gone, right? The Senate only has another week. They go home for August recess. So let's assume, for the benefit of this conversation, they pass the bipartisan deal. Chuck Schumer gets the ball rolling on reconciliation. Nothing's going to happen on either of them until everybody comes back after Labor Day, right? Our kids are going to be in school. The temperature is going to start changing. You're going to be back from the beach before there is any progress here. This is all really just laying the foundation for what will be another grand debate.
How does 2022 hang as some sort of cloud over this?
Well, it depends if you ask Nancy Pelosi or Kevin McCarthy about that, but I'll tell you the Republican leader is absolutely convinced and refers to her as a lame duck speaker on a regular basis. The fact is, when you spend this much money, and we saw this in the Obama administration with health care reform, there's a reason why this is happening first, right? This would be a lot more difficult to pull off. In fact, impossible likely in a divided Congress. And history shows us that following big elections like the one we had here and big pieces of legislation, the midterms will probably turn to the party other than the one holding the White House. So, I mean, Nancy Pelosi only has 4 seats. So once we go through this next debate, once we get through all the COVID business and everything else, I like to think, in the fall into the winter, yeah, this could be a difficult midterm election for Democrats based on history alone.
All right, Joe, I just want you to make a few phone calls, get me my gateway project. And
Let's go.
And then we can talk again. Joe Matthew, thanks so much for joining us, host of Bloomberg Sound On. And he joins us from the 99.1 Bloomberg Studios in Washington, D.C. And so it looks like we're going to get this infrastructure bill, but boy, that other one, that bigger one that Joe was talking about, the reconciliation, that's how you're going to be really making the sausage there.
And I think the challenging thing for Democrats is the stuff that gets through in that big bill isn't stuff that is seen for years.
Right.
So the money's spent or the money's committed, and then your district doesn't start to see the results for quite a time. And that's an important issue for 2022.
Right. It's easier to say, hey, I got the money. Let's go build this bridge or repair this road.
Yeah. Well, that's going to do it for Bloomberg Business Week on this August 2nd, Monday, the first trading day. Sound On with Joe Matthew is up next. This is Bloomberg Radio, and this is Bloomberg.